is Rontangai. I'm from Blooming Services. So I'll take you through my small little agenda that I have. We'll cover what is self-assessment, the different forms of income, the income tax bands, personal allowance, payments, and deadlines. So basically, self-assessment is more or less just you declaring to HMRC what your income is. So if you've earned any income that has not been declared, any income that you've not paid any tax on, like pays you earn income, then you have to declare it. So even if you have earned income that you've paid tax on and you still have additional income, you could still declare that. Because if you're going, for instance, for a mortgage and you want to get a house with a higher value, if you have additional income that you've declared in your self-assessment, that will enable you to get the house that you really want. And obviously, people sometimes worry, but I've already paid tax. So the system obviously is designed to deduct the tax that you've already paid. So you're only paying tax on the additional income that you've not paid tax on. So what you need to do if you are self-employed, you need to kind of get yourself registered with HMRC way before they kind of get in touch with you. Because most people then only kind of jump when they've received a letter and they're like, oh, I need an accountant to help me. But you could save yourself the hassle and the stress and the sleepless nights by just notifying them that you're now self-employed, you were employed before, you're now self-employed. So either by phone or by completing a form online, and then they'll send you via post what they call a UTR, a unique tax reference number. And then all you need to do is then declare your income by the 31st of January. So the reporting period is normally from the 6th of April to the 5th of April. So for this year is the declaration for the 6th of April 22 to the 5th of April 23, and that needs to be done by the 31st of January 24. And then these are the various different forms of income that one would have to declare. So if you're self-employed, you need to declare your profits from your self-employment, any grants or support payments. For instance, over the COVID period, the government did offer people that were self-employed various grants to keep their businesses going, like the self-employed income support scheme. Most people got that. Small business grant fund, coronavirus job retention scheme for some employers. Obviously, that amount had to be declared when you're submitting your self-assessment tax return and your company tax returns. And then most pensions, either state or company if you're employed, or personal pensions, you have to declare them because that's the form of income that you're receiving. Rental income, you have to declare that. Yes, you have an allowance, £1,000, or if you're a resident landlord and you're just renting out a room to enable you to not to lose your property, you will get about 7.5 as part of a rent to room scheme as an allowance. If you have received a trust, you will have to declare that income from a trust. Any interest on savings, but the ISAs are exempt. And then state benefits, because people think it's a state benefit, you don't have to pay tax on it. You are liable because it's a form of income, you have to declare it. And then a personal allowance. So every single individual has an allocated personal allowance amount. So it's only when you earn over that personal allowance threshold that you need to start paying tax on it. And for 23-24, as you can see, the personal allowance threshold is 12,570. So it's only after you earn that, then you start paying tax on it. And you have other allowances that people might not be aware of. For instance, you have the married couples allowance. So the minimum starting point is 3,640 up to a maximum of 9,415. And that's gone up again for 23-24. Anybody blind, they have a personal allowance as well. For dividends, there's an allowance, but that's going down next year to £1,000. Then these are different income tax bands that we have. So as I said, you have your personal allowance that's free, and then anything over the income personal allowance, you have to start paying tax. So it all depends how much your total income is. That would determine which tax band you kind of fall in. So if you earn up to 37,700 for what we're reporting now, that's only 20% you have to pay. Then anything over up to 150 is 40%. And then anything over 150 would be 45. But obviously this year that's slightly gone down. But obviously if you're in the 20% bracket, you're more at an advantage for 23-24 because that's now been up to 50,270. But obviously the additional, if you go higher, it's gone lower. So you've lost about £25,000 in terms of the 40% band. And then we have the deadlines, as Mo was saying, that people might then be going and asking for help in terms of to be able to pay for it. So the deadline is the 31st of January each year. And you have to have submitted your return by then and have paid by then. Both have to be done. If you haven't paid, there's a penalty. If you haven't filed, there's a penalty of £100, and the penalty goes up after 3 months. Then you start paying more, and there's interest on it as well. I have a little scenario that I've kind of presented, because sometimes we're asking, how do I know how much I have to pay? Well, you have to then enter the information into the HMR portal, and that will kind of calculate and determine how much you have to pay. So I have an example here of someone who's employed but with a rental income. So they have a second property that they're renting out. So their pay from employment was 41,902, and then their profit from their property, from the second property, is 5,704, making the total income 47,000. So after deducting their personal allowance of the 12,570, the taxable income is at 35,036. But they're only going to pay the 20% tax on it, but only based on the employment income, because obviously that is what makes them go over the threshold. And their total tax that they've already paid in the employment was 5,754 and 20 pence, making them liable to pay 1,253 at the end of the 31st of January. So obviously, as I was saying, that people sometimes worry to say, I've already paid tax. That tax is taken into account by the system. It will then ask you how much you earned and how much tax has already been paid. Then I have another second scenario as well here of someone who's a director of a limited company. So they've made a profit out of their company of 11,900. They've taken out a dividend of £35,000, making their total income 46,900. After taking away their personal allowance, they're left with a taxable income of 34,330. They would pay tax on the dividend because it's the dividend that has the largest amount of income there. And after deducting the personal allowance, they would pay £2,828.87, because obviously dividends attract a lower tax rate of 8.75%. So they're paying less tax at the end of the day. You've got my contact details if anybody wants to get in touch, and thank you so much for your time.